Okay, hello everyone. Welcome to today's bar replay. Bar replay and paper trading practice session. It's February 6th, Friday, just after 1:36 a.m. after midnight. So I'm going to be starting as a test these bar replay paper trading sessions because I'm still going to do my regular chart analysis for stocks and crypto every week. And I'm going to try these paper trading bar replay videos because a lot of times I was talking with my colleagues that charting is not the same as trading. I need both, but I want to make sure that I'm doing two things. One, that my skills are up to par, and two, trying to educate and help the community of technical analysts and stock crypto traders out there. So this is TradingView, the app. And if anybody has a registered account, the bar replay button is all the way at the top here, next to the undo button and next to the create alert, kind of in the top middle area. So I'm on a Bitcoin USD Bitstamp chart. Let's go ahead and open bar replay, and I'm going to start a new replay. I'm going to rewind all the way back to 2021, the top of Bitcoin in that year. Let's go back. And to actually open the trading panel, I have to click this button, trade, here. So in this first part of the video, I'm going to bar replay and essentially paper trade practice investing Bitcoin, let's say about 4 to 5 years ago, when I still remember this. And I'm not going to use any indicators at all. The only thing I'm going to use is price on the top and then volume on the bottom. Very rarely the ATR in this bottom corner. That's a custom indicator. I'll just turn that off for now. And then the top right is just the symbol name for people to see. So back in the days of November 2021, Bitcoin was 69,000. We're topping out at $64,000 to $69,000 Bitcoin. And as an investor, that top was risky for many reasons. But from a technical analysis point of view, the Bitcoin Weekly at that time had a double top. So if somebody was cautious, I'm going to start the replay. We got rejected. We got rejected pretty hard on this weekly chart. So we can see that once we lost the resistance point and the support, there's always going to be ups and downs, bounces and whatnot. But because we were almost in an ascending triangle and then we lost that, that's bad. So probably, I still remember this, is we could get a bounce up to the 55,000 range back in 2021 and then see if it's going to pull back down or not, because once we lose that support, that's always a red flag to me. So it could bounce up to 55,000 and crash back down. So let's just see if that happens. Okay, so then there's that little bit of a bounce. I'm going to practice the short right now. So as an investor, I'm going to use this big mental stop loss, for example. I'm not going to actually put it on there because actually I'll just put on there to make it a good habit for people. I'm just going to use a very large stop loss of 25% as a short. So I'm going to sell limit order of the current price, which should be 47,142. That's the bid in this example. And I'll just do 1 unit. So it's selling. This is actually kind of strange to decipher. It's not 1 USD. Down here it says 1 BTC. 1 BTC. So I'm selling 1 BTC. Maybe we'll just do let's do 3 BTC, make the numbers bigger. Put that order in there for trading practice. And then for practice, I'm going to put the stop loss at negative 25% and then target the 50% short. In real life, I wouldn't do it exactly like this, but because it's bar replay paper trading, let's just let it go. We did not get the bounce up, right? Still making lower lows and lower highs and dumping. Our stop loss is still way up here at 58,000. 59,000. We could have a bad pop, upside down head and shoulders. It might pop green. Resistance at 45.5K. Actually looks like it wants to bull bounce, which it's doing. Consolidate, but this is like what's happening now in real life. If we lose this support at the bottom of this structure, it could crash more. Let's see if it holds or not. Oh, see, we got the crash. Is he going to hit my target? In this case, is 23,000. And this is a long-term play. I had to wait 150 days. I'm on 3 times speed right now. So 150 days to correctly short Bitcoin back in 2022, basically. So in this example, made $73,000 profit shorting. That was basically shorting Bitcoin for the trade value was 141,000 USD. So these are all bar replay numbers, but this was a tricky scenario back then because everyone was so hyped on Bitcoin. I remember here at 65,000 that everyone was saying Bitcoin is going to 250,000 or 1 million, which eventually we're going to get there. But once we lost that support, and then this just happened in real life in 2026. It's very similar. We bounced, and then we just got rejected down from EMAs and down from trendline support as well. So now let's try to practice a long investment setup. Let's pretend, continue here from June 2022. Going to close all the, close the position. That was a successful short, although the risk was basically like a leverage type of position. So now we're going to practice longs as an investor holding longer than 1 year, for an example. So we're still downtrending. This is a bar replay on 2022 Bitcoin, still downtrending. So I'm not going to buy Bitcoin until I see double bottom, upside down head and shoulders, or an actual trend change reversal. We might get a golden cross up there with the EMAs and then try to buy one of those. So we just let it run. Go a little faster, 5 times speed. We're still in the downtrend, although there's a teeny bit of support here above 18,000. I'm not even going to draw any trend lines or anything. Look at the volume. Volume's much lower. Okay, so then the price structure I'm seeing is Bitcoin starting to go sideways above 18,000. I could try to open a little bit of position in long right now as an investor, waiting to see if it's going to crash down a little bit more or not. Very suspicious. And there's the next crash. Now, this is interesting. There's a big volume right here on November 2022. Let's zoom in. Big volume here. That hasn't happened until June 2022 and May 2022. So this is like some kind of signal. Might not be the bottom. The price is hesitating there, and then we get the short squeeze up to 20,000. So let's see if it pulls back or not. Even if it goes up, that's okay. Just stay disciplined. Don't chase it too hard. All right, so there was that pullback down to 19,053. So what I'm seeing is even without trend lines, it's downtrending, and then Bitcoin price started going sideways, and this could be the start of the uptrend. So even if I put trend lines on, I can see that Bitcoin price broke out back in 2022 into 23 outside of that range. So just off that fact alone, that potential trend change reversal from uptrend in pandemic 2020, pullback in 2021, continuation rally in 21, crash in 2022, and then this potential uptrend reversal here. This is earlier than I bought in real life, but this is a decent spot to try to buy some. I want to put a large stop loss. This could get stopped out. So we'll just play one. I'll just pretend I'm buying one Bitcoin back here. Put it in there. Put the stop loss. Put a giant take profit, or we just practice putting a take profit at, sometimes I do placeholder take profits at 100% just so I could get the OCO order in my exchange. Confirm it. Let it go. If it crashes into my stop loss, that's because I'm stop loss below the previous swing low. It could crash like that, but that's part of the risk. It'll be unfortunate if it crashes down onto me, but it's not. It's starting to make a higher high here in the price, very subtly. Can also draw a trend line on the bottom side. If we lose that, that's not really ideal. But since we just came from a strong 2022 downtrend into 23, high, low, high, low, high, I'm going to try to save the higher low as a bull above 25,000. So I'm going to buy more Bitcoin. Let's buy more. Let's buy 3. Now it added to the position. So this is kind of weird. It just automatically created my buy, stop loss, and take profit just for efficiency. So thank you, TradingView. So it's just using the exact same OCO order as before. In real life, though, it would have been a separate order. They're just doing it to make it easier for us. Thank you, TradingView. So my average buy is obviously higher, but you could see that we were saved by the support level, and the uptrend is still intact. So the first take profit level here for an OCO order, I have a placeholder at 100. So here's a good example of differentiating between, I'm not day trading practicing right now. I'm doing swing trading, position trading, and investing. As an investor, I'm not going to put the take profit right here. As a trader, as a swing trader, I am going to do that. So I'm practicing swing trading right now. I'm going to move my stop loss up. And where am I going to move it? I can move it to break even or above break even. I don't like doing break even stop losses because a lot of times if it fails, I actually have a loss. So I'm trying to get more into the habit of just lock it in. Lock it in at plus 25 or plus 50, something like that. So now with that confirmed stop loss here on the left side, I can't really lose in this trade. In terms of, I might lose the upper half of the 50% profit, but I'm not going red. That's a habit I'm trying to really force on myself this year. Just lock in profits. Don't let it move around too much for myself. This is not financial advice, just my own strategy I'm trying this year to enforce on myself. So I have a plus 50% stop loss, and then my take profit at plus 100%, just let it run. With a nice bounce. and then it went straight into the 100% target, which was 53,000. So as a swing trade, I played that one leg correctly. And I remember in real life, I bought right here, October 2023. That's when some other people, supporters, subscribers, viewers of this channel, we all bought cryptos back in 2023. So that was 2.5 years ago. It just feels like yesterday. So still in this higher high, higher low, but then if I exited my position for the profit, the next, as a swing trader, the next spot is where's the next higher low for me? So I have to use trend lines in this case. It could be somewhere like 45. If it comes down to 35, sometimes Bitcoin doesn't come down. Sometimes it's going to just come down to 49,000 in 2023 or 4. So we're successful trades. Keep going here. Keep trying to play long. So even if it went super high and it's like, oh no, I missed it, right? That's one of the drawbacks of having an OCO order. What I really wish TradingView and certain crypto exchanges did is I just wish everybody had trailing stop loss, because that's my favorite type of stop loss. I love trailing stop losses because there's regular, right here you can see on the right side, you have a market order, you have a limit order, you have a regular stop loss, which is a market sell stop loss, and you have a stop limit, which means there's a stop price, and if it goes below the stop price, it activates the limit sell order. So the missing order type from TradingView and from some other crypto exchanges and brokers is the trailing stop loss, which, as the name suggests, the trailing stop loss follows the position a certain percentage away set by the user. So if I did the 25% trailing stop loss on this example, if the price starts going up, let's pretend I bought at the bottom of this blue line, then the trailing stop loss just follows it up in the price every day until the price stops, and then the stop loss stops, and then if the price drops, then it'll sell. I love those orders because I don't have to keep physically grabbing my stop loss and moving it up or adjusting my take profit. I just like the trailing stop to just follow it and then close it for me. But as an investor, it's still risky because it can auto sell accidentally. Let's say if someone's holding a position for 10 years, that trailing stop losses are not good. Not good. But I'm just saying in this example for Bitcoin, because it's a speculative asset, I didn't have to put my 100% take order there. I could have used a trailing stop loss, and then it would have sold out for me at 62 area, or not even sell yet. It would still hold. So that's why sometimes doing an OCO order in a raging bull market is bad. But also, I think even worse, however, taking profits is never really a bad thing. But I'm saying what would be really bad is if somebody did this trade back here, which is similar to current 2026 trade of buying here and then not putting any stop loss around this area and then crashing and losing everything. So that's why I'm just saying trailing stop loss can actually be beneficial for certain trading scenarios. So now in this example, Bitcoin 71,000. Are people probably feeling FOMO at this point? Because everyone's going to be wondering why they didn't buy Bitcoin at 15K, 25K, or 40K. I remember somebody telling me, I was telling them at 40,000 because I bought it way back here at like 25,000 Bitcoin. We just had a double top on this example. But I remember somebody telling me that they did not believe that Bitcoin could go higher than 40,000 during this time. I was telling them, whenever I saw this person, I just kept telling them, hey, I think Bitcoin's going up, it's uptrending, so we can just keep going higher here. And then they would just say, oh, the price too high. But That's a big mentality people will have, is when things start crashing, then people kind of trash talk Bitcoin and crypto. When things are going up, people think, oh, price is too high, price is too high. That's why when it starts uptrending, I just got to get in there. Just get in there if it's uptrending. If it's downtrending, I get out of there. Like right now, I get out. I get out of there. When we're uptrending, I want to get in there as early as possible, not get in at the top at 70,000. All right, so let's see where my next entry is. If I'm just patient, I'm estimating, maybe if it crashes, maybe in the 50,000 range. It just tapped it, 50,000. So now it's in this consolidation. So ideally, I want to buy at that blue line support. If we break out, I have to buy as well. So let me try to practice. I actually missed that spot, but let's just try practicing a breakout strategy. Let's say now that Bitcoin 67, we're just going to buy 2 Bitcoins, which is a lot of money. And put the stop loss way down here. This is a huge example, right? Because a position is probably too big for most people, retail traders. But this looks like a consolidation flag to me. It's still in this uptrend. It's not quite downtrending. We also had an upside down head and shoulders in that blue, and we're going to break out above this resistance line. We should be able to go 40 to 80%. So 40% would be 88,000 in this example. 80% would be $112,000 Bitcoin in an estimate of the time of this wedge pattern, which is about 251 days. Let's just put a date. This is not the best way, but I'm just put a date range. 251 days would be right here in this blue box. So let's pretend I'm going to buy that 2 Bitcoin. Put the stop loss down here, 25% down. That's at 49,000 Bitcoin, and then 100% stop loss is 75,000. At $105,000 Bitcoin, and then confirm that order and let it go. So we're rallying a lot, very parabolic, pulling back. It's almost at the target. So at this case, because it's rallying and it's about to hit my target, I'm going to move my stop loss again. The habit of move it up higher so that I'm not in red anymore. There's no red here. I'm all in green. So now I just sold. The take profit worked perfectly. Technical analysis, when it works in a bull market, it could work. Definitely. Actually, the percentages are, it's about 60% price patterns. If we study the books, if we read the price pattern books of somebody like Thomas Bukowski, let me look up the book name. Encyclopedia of Chart Patterns by Thomas Bukowski, Wiley Trading Publishing. Great book. If the hardcover is $65, I think there's a digital version of that. Money well spent. It's like one of my favorite books. I remember that. But in his research, some of those patterns are about 60% win rate. So now that that is over, let's just review really quick. We're doing long biased uptrending strategies using just price patterns and some technical analysis, price trends and trend lines. And I'm using huge stop loss, very large stop loss. 25% is very, very big. In that example, it would have been something like, let's just pull up the calculator. I think I had a $130,000 position on. That's a $33,000 stop loss. It's a lot of money. I'm just using big numbers for practice, for simulation. But the stop for, most people should not really be using such large positions or leverage. I just need to put a habit of stop loss as a trader. Investors don't have to really do that. If somebody bought Bitcoin in 2009, 10, or not 9, and 2012, 13, 14, 2011, right? Somebody bought Ethereum in 2016, 17, 18. They don't really need a stop loss right now. I'm saying people who need a stop loss is people who are buying in recently for every trade as a trader. So now we hit that 105 area and the profits are adding up. We'll go 10 times speed. Let's see if it pulls back because I can visually see another trend line. If we pull back down to $75,000 Bitcoin, I might buy more. It's very, very close. Actually pull back down to this major level of support, 72,000. So again, even though this looks really weird and ugly, high, higher, low, high, higher, low, high, higher, low. Into 2025, this last year. Oh, this is actually the tariff crash of last year. Well, you can visually see high, low, high, low, high, low. What was that range? 17%. So let's just pretend we're super bullish on Bitcoin, which I was in that time. Not super bullish, but I was bullish because I'm thinking, all right, this pullback, support, 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 support. See if it holds again. $87,000 Bitcoin. Let's just practice buying one in this case. If let's say if somebody's not sure, one at limit, put that stop loss in there that we calculated, put that take profit in there and confirm, let it run. There's the bounce. There's the rally. Can it break out above 110? That's what we were all thinking about. I could draw a resistance trend line. We get the breakout. It's going bounce. Can we bounce off the resistance? Can we do it? There it is. It didn't quite hit my target. So because visually I bought here at 89,000 and then we topped out at 126,000. The middle area is somewhere around here, 106. So if I was really disciplined, which I'm going to be honest, at this particular moment in time, I was not super disciplined. So I need to practice that. Lock it in. Let's say below this low at 102, $102,000 Bitcoin, confirm that. Then I have no way of losing. I can't lose as a long. If it went already in my direction, if I had a trailing stop loss of say 10%, let's use the ruler. 10%. This pullback right here would have stopped me out on a trailing. So this is a case where having a regular stop loss actually worked. But now in this particular scenario, my stop loss would be 103K and then my take profit is still 133. I'm going to profit if it hits any of those two targets. If it comes down, I win still won. So we brought it 87.5K, 17% only, but still 17% plus profit is better than negative 25%. No stop loss style, retail style. And if this crashes on me, then I really needed that stop loss. So we can see the trend line down here holding 1, 2, 3, basically. Remember in last week's video in end of January 2026, I was saying sometimes the fourth or the fifth time in trend line or support usually fails because it's really obvious. So for me, I'm really, in this example, I'm watching 88K. If 88K fails, maybe we should short Bitcoin. And this will be kind of wrapping up the swing trading, the position trading segment. Let it run. Oh, just pierce below that. See what I mean? That didn't happen the last 3 times. So this is the end of November 2025. Probably bulls are going to fight here. And if we can bounce, we might bounce up to something like 101, 102K. And then if that fails, we might go down. See if we get the bounce or not. It's barely holding on. Looks like it's about to fail. It's trying so hard. Okay, let's rewind. So rewind here. This is, I actually played this as a long, and then it's fast forwarding to where we are today. Is we went for that top of resistance zone, rejected down. We lost this spot. So if I didn't short this, but I need to practice this. If I lose this particular spot, I need to short that down harder next time. This is the fourth zone that failed. 1, 2, 3. This is a fourth level support that failed. So let's get the trading on. Sell, limit order. What's the price here? 86,527. I'll just short one Bitcoin here. What's that stop loss? Next previous swing high would be 13% up, stop loss that. Maybe if I was conservative, do 26% to the downside, double that stop loss. Confirm that. And the range inside of here is 40%. So maybe it might go -10 or -20%. We're short right now. We get that bounce, but we get that rejection. Then we can see the rounding, the rejection almost got stopped out. And then actually had a winning. And that last one made $20,000. Bar replay paper money. Up in the full report, obviously, that was basically perfect trading, which real life is not like that. And what I'm trying to show to people is, even though I'm using large leverage style positions, I have been trading for almost 9 years now. So that's why I'm using larger than normal position size. And there's risk management in here in terms of, actually, I shouldn't say risk management. It's just trade management. I'll go into risk management later. More disciplined risk management. But at least I'm using stop loss and take profits, so OCO orders. And this is much longer term swing trading, position trading. And how long did I have to wait for these setups? Long time. From top to bottom, 22 to bottom of 23. That's 442 days. That's almost 1.5 years. Then from the bottom of Bitcoin to the top of Bitcoin, that's 1,037 days. So there's that one social media post of the one guy who cracked the code of Bitcoin saying that we usually go up for 1,000 days up, green Bitcoin, and then for about 365 to 400 days, we go down on Bitcoin. That's been the cycle since the beginning of Bitcoin trading. This guy cracked the code, and it's actually true. He actually predicted the day. It was October 10, the exact top of Bitcoin. This guy's amazing. So credits to him, kudos to him for sharing the pattern. Still came true in 2026. So for me, and I'll do this, the Bitcoin analysis in a different video, probably tomorrow or Sunday over the weekend. But if I Fibonacci this thing from the bottom to the top of Bitcoin, we almost hit the 618 level. We almost hit the 618. We hit the 50% level. That's where we're floating around right now. Where are my levels? My 618 was, I was hoping for, let me get $57,000 Bitcoin, 57,000 or 55,000. We actually didn't get there. Once we lost 70,000 and once we lost 83,000, you can very quickly see that's where the panic, the capitulation happened. And so I just wanted to point out to people that it's still possible, my mouse froze, it's still possible to be successful in trading even without using 20 indicators or 10 indicators. I'm just using mostly price patterns. I'm using mostly price trend. And I use some trend lines because sometimes it really does help. And then I use Fibonacci just to these colored lines to see horizontal support very easily. Because when the news, and I respect the news because it's a very hard job to give people all the information and news every single day, nonstop. That's a tough job. Respectable job. I'm just saying for me as a technical analyst, chart trader, swing trader, is that usually most people don't think about or are not thinking or looking at the potential risk of the downside levels. Meaning that when we were up here at $125,000 Bitcoin, almost nobody I saw online was talking about, well, if we Fibonacci like I did from bottom to top, where are our levels? And just set alerts. It's 100K. Top is 125K for now. Once we start to lose this, we were looking at this saying 100K. What's the next Fibonacci down? This was forecastable 5 months ago. If somebody just drew the levels, 82,000, next level down 70,000, next level down 55,000. And we can also measure this. If I measure that failed consolidation is 50% to the downside, 1.5. Negative 15% is 71,000. Then negative 30% is almost that 59,000 level, which we almost tapped at. Now, so we did a little bit of investing practice. We did swing trading practice. And then the one time frame that I usually don't do because I'm not really a day trader anymore are the day trading and scalping time frame. So I'm not going to do scalping because I think that's a little bit too short-sighted or too focused on shorter time frames. We could still try day trading though. Like for example, if I saw this social media post, somebody was asking, a very famous YouTuber guy who I respect, was saying, what is going on with Bitcoin right now? And I'm sure a lot of people had that question. Why are we crashing? What is going on? If we use technical analysis, why are we crashing? We were downtrending in the price. Downtrending means a greater than 50% chance the price is going to go down. And then why is it crashing so hard? There's probably up to 5 or 10 5 to 10 fundamental macro news like political, government, corporate. There's just so many bearish news that happened in 2 weeks about Bitcoin and corporations and government, etc. So the fact that we were way up here, there's also, like I said on my stream, there's a head and shoulders here. There's a giant head and shoulders here. That's a scary one. That would mean Bitcoin crashed like negative 50%, which sort of happened from the all-time high. It went from 125 and went negative 50% down to 62,000. So there's another signal that was some kind of relative bottom, a tradable bounce. So let's get into the day trading. I digress. So just knowing that the big structure, I'm downtrending, 4 hour, we were still downtrending. 1 hour, we were starting to downtrend. And what we can see is once we lost this structure of the potential trend change, we had another head and shoulders and then it turned into a downtrend. Just very quickly, once I start getting intraday, I might want to start pulling open moving average cross. I'll just use 1226 because that's one of my shorter term lines that sometimes you could see the trend change. So I'm using 1226 and it's my light blue and purple. So we could see very short term on a 4 hour chart, we almost had the uptrend. Actually, let me switch it to 5200 because you'll be able to see it better. I'll go back to my 5200, my yellow and red lines. Now we can see once we lost that spot, we were up above, we had a golden cross on the 4-hour, almost had it, bearish divergence, pull below, and then we're below the EMAs. That's bad. That is bad. That's right before avalanche. We're about to crash. So on a daily chart, remember, we were death crossed all the way starting from November 2025. Bad sign. 4-hour, death cross again. 1 hour, death cross again on January 19, 2026. 15 minutes, we're still death crossed. Multiple death cross again. So then once we did all that forecasting and we know, okay, we're in the downtrend. Now, once we got that capitulation dump yesterday, or it was yesterday afternoon, the capitulation dump of this leg down, February 4 to 5, this leg, on a daily chart, that was just pure red in the box, if you could see. 4-hour, it was pure bear momentum. Negative 17% down Bitcoin in one day. That's not normal. That's not normal. So the volume was higher in an hourly, still not normal. But what I'm trying to show is if we keep going intraday, if someone is a day trader, we're starting to get into day trade mode. 15-minute, still in that downtrend. 5-minute, still in that downtrend. 2-minute, still in the downtrend, but wait a second, it's starting to change here. But even a 1-minute, not all the data shows here. I'll just go to 2-minute. 2-minute, now you can see the 2-minute trend change. We're crashing all day long. All day long. February 4, February 5. Then we get that one flash crash. Down to where? The negative 50% off Bitcoin zone of $62,000. It was forecastable. It was predictable because we're downtrading so hard that maybe we're going to hit that 50% off Bitcoin all-time high zone. Once we pierce that on high volume, it was not down there for long. It was down there from New York time 6 o'clock to 7 o'clock New York time. That's the Asia Open session right there. So then when we're that oversold, people around the world were saying Bitcoin is oversold on a lot of indicators, which I'm not going to show right now. Then could I have played the scalp? Could I have played the day trade? Yes. The key is just didn't want to buy it here at 65,000 because if I had a tight stop loss of 3%, I would have got stopped out there. So I had to just wait for the crash. And once it started bouncing, somebody could buy that if they're very skilled, if they had patience, because somebody could have gotten stopped out on the left side of that trade 10 times in a row. If somebody's day trader, they could have, let's see, from 6 o'clock to 7 o'clock, maybe they could have got stopped out 5 to 10 times if somebody did that wrong, unfortunately. Just trying to time it. There was on a 2-minute on RSI. I'll just bring it up briefly. Actually, I don't want to show it because it's a bad habit to confuse people. Just understanding that we got really flash crash oversold. And then let's bar replay to this spot. Let's play that day. November 5 afternoon. We're still downtrending in crypto. I do not encourage this because most of the time these types of bounce trades actually fail and you only get like a 1% out of Bitcoin. This is a very rare case of being extremely oversold. Somebody could have tried to buy in this zone and you could feel it once it gets real capitulation crash, almost like all stop losses, shorts attacking as hard as possible. Let's just buy some because oversold strategy, like really oversold strategy, meaning capitulation crash, usually there's some kind of balance on Bitcoin. And I wish I was trading live because I would have done it live. But I wasn't live at that moment. For trading, at least. So let's pretend we're going to buy 2 Bitcoins. I'm simulating like a larger leverage position for retail. Buy. Limit. I have to let the order, did the order go in? No, it did not. I have to rewind a little bit. All right, this is perfect timing. Let's just say now it's like at that flash crash. It lost the structure of the previous support, negative 2.8%, when double that structure of this little small tiny fail. So we hit the target downside. Buy that. What's my stop loss? Let's say I was brave. I could put like a 4 to 5% trailing stop loss, try to target like 10%. Let's do that. 5% stop loss, 10% target on a pretending I'm doing like a smaller position. This is leverage position though. For this trade on 10 times speed, let it go. It stopped crashing. Beautiful. Sometimes as a day trader, it can catch those bottoms. Don't want to catch it too many times though, because more than 50% of the time it fails. But you can also see, even on 2 minutes, sometimes you can see the trend change of, even though there's a lot of candles, it's still making lower lows, lower highs in the larger structure to get that flash crash. Then what happens? Potential upside down head and shoulders, or you want to interpret this as a trend change. So instead of leaving my stop loss down here, remember what I'm trying to do better is lock more of my profits in. So below the previous swing high, let's say in this zone, try to lock in 5,000, confirm, and I also have my take profits. So now I cannot lose in the trade. I can't lose in this trade. Let it go. Even though it's emotional, watching my P&L bounce around here, not good. But if we hold that low, can we create another higher high? If I'm getting nervous, let me move my stop loss even higher to 8%. And then we hit the 10%. Perfect trade. Perfect. Do I always catch the perfect bottom? No. For trading, that's the trick. Not the trick, that's the skill. Because algorithms were probably, somebody was out there saying, okay, if this thing is 4% measured move, we're going to target 4% to downside, which is about $61,000 Bitcoin. Somebody hit that exactly right on the dot. And in terms of a day trade, that was a full day of holding, 12 hours. So maybe that could be, it's not quite a swing trade, but it's like that's a long-term day trade. And if somebody used a trailing stop loss on their crypto exchange, 5% trailing, if I bought in that 61,000 zone, let's see where it would have closed. It wouldn't have closed at all, 5% trailing at the manual closed out. So this is the business of trading. Now, I don't want people to get the wrong idea of it's not this easy. And using this much large position size, extremely dangerous, either in regular trading or leverage trading, because if somebody makes 10 mistakes, for example, they're risking 10%, 20% of their account, they can only make 5 mistakes and then they lost all their money. It's not okay. So the correct position size, let me rewind. For most people starting out, if somebody's a beginner, I would recommend don't even risk real money. That's one life lesson that I had to learn the hard way as a trader for 9 years. If somebody's a beginner, do not risk real money until you can prove using replay trading or paper trading on assets that we don't know. I shouldn't say you, but even I'll pretend I'm talking to me. If I was a beginner, I should not risk any real money. If I was a beginner, I should do paper trading and bar replay trading only until I have a greater than 50% win rate down here in the metrics. Because the fact is that nobody wants to talk about is that retail traders have a 90% to 95% losing rate. Loss. Bad. Bankrupt. Algorithms, the bots, taking everybody's money. Hedge funds, institutions who have $1 million, billion-dollar algorithms winning. They're just running their strategies. So, as a beginner, there's that rule. Somebody says, never risk more than 1% of your account. I want to make it clear to people that that is true, but I think a beginner or somebody who's having trouble struggling in the market, especially in this market, an economy is even 1% could be too much. I think somebody should risk personally like 0.1% of their total account. So let's just pretend if somebody's in the intermediate level, let's say if they have a $10,000 account, 0.1% is $10. If somebody has a $100,000 account, 0.1% is $100. That's why somebody, so the average of that 10 to 100 divided by 2 is $55. So somebody should probably be only doing like $50 trades maximum. I'll just round it down because everyone, retail traders, including myself at one point, the win rate is not that high. So, risking $10 to $20 per trade, especially if it's super volatile like this and somebody's a beginner, intermediate, is to either just paper trade, risk no money. If somebody is going to risk some money and they don't have a winning strategy, just risk like $10, risk $20. So let's pretend in paper trading, in TradingView, we start out with $100,000 paper money. So again, 1% of that is $1,000. That's kind of too big. If somebody does not have a winning strategy, they still could go bankrupt, just slower. So my recommendation is the 0.1% of only risking $100 or less. Because most people, they're going to have 90% loss rate anyways. So let's pretend, let's wrap up this video and still pretend someone's trying to be a day trader in crypto and we hit that bottom zone, right? The correct position sizing for somebody with like a retail size account is not 1 Bitcoin. No. I hope the viewers understand what I'm saying is just shrink the position size down. So I'm not risking $1,000 per trade. I'm not risking $500 per trade. I'm not risking $10,000 per trade. I'm not risking my whole account on one trade. Okay? Because this is how people blow up their accounts. If somebody was doing maximum position size, let's just pretend like millions. So let's say somebody had $100,000 USD. And then they did 10 times leverage. Overseas trader, global trader, international trader. And they were wrong. Let's say they did $1 million short right at the bottom here. They would have got absolutely liquidated in 1 hour. All bankrupt in 1 hour. So that's the risk management is when I'm not sure. Even for this year, I'm trying to practice that when I'm not sure. Just shrink the position size down until it doesn't matter anymore. It could be even zero. It could just be paper trading. It could go to $0 and that doesn't even matter. I could do 50. I was talking to a colleague. I could do 50 trades, day trading and paper trading. And all it is just learning experience. Most people are betting too high without a guaranteed win rate. That's why all retail traders, like 90% of them, blow up and go bankrupt. The reason I survived is sometimes I just skip trades. So now what's the choice here? Let's pretend, oh man, somebody got stopped out 2 times. They lost $200. Is the secret to put in 10 times leverage right here? No. The secret would be either stop trading, reduce position size, paper trade, or just try again, but maybe try a different calculation. So now let's try that 0.01, but do a big stop loss. Big stop loss. Down here. Now I'm doing a 15% stop loss, but I'm only risking $100 still on the trade. Let me just make the stop loss bigger. Then for take profit of plus 15. This is probably what should have been done for the first 2 trades, right? Because we saw in this example of the first time, the stop loss was only 1.5% away. Easy for market makers to just poke that down and kick somebody out their stop loss. They have instant loss. Second one is the timing was too early and the stop loss could have been too close, -4%, because of the volatility of this entire range ended up being 10%. That's why we had such a violent move to the downside here, because everyone's stop loss got kicked out. So now on this third trade, open it up and then let it run. So the good signs are it's not crashing like this and it starts to make a trend change. So somebody now, if it's like this, if it seems to be stabilizing, I could add another position with a tighter stop loss using that same calculation. Now we have slightly more Bitcoin. So I have to add another risk reward scenario that if I bought here, perhaps then I'll only trail like a 1.5% on the slightly larger position and try to target 4% or so. So let's let it run. Right? If I close this position right now, remember we had -$100 loss, -$100 loss. That's -$200 loss realized in day trading. Right now, because I managed the position side of the third trade and then tried to play a continuation of the fourth trade, we actually have a plus $39 win net. So I need to not let this. So one of the pitfalls of a beginner would be just rejoicing, like, "Oh my gosh, I'm back green. Yes, yes." But that's how emotions. To trade like a robot is no emotions, grab my stop loss, make sure I'm not going to lose. So I'm going to lock in at least $150, let it keep going. If we go higher, like it's okay, 316, 319, make sure I lock in profit that I'm not going to have any red on this trade. Confirm that. I locked it. I'm going to lock in at least $250. So in those 4 trades, I had net plus $50 instead of a net $400, net $200 loss. Let it keep going. Okay, stop this out. For probably about around like a $300 something. Oh, $50 gain. I would say in that scenario, that's probably the second best outcome that could have happened. First outcome is don't do those first 2 trades. Wait for a trend change and just play this last part. That's very conservative, but that's 7%. This is the second best scenario of if I had 2 losing trades, I either have to stop or I have to be very, very good at my next 2 trades. So this was actually a 50-50 example coming out for basically above break even for a day trader. Let's rewind and practice to see, okay, if I'm very patient as a day trader, how do I just not have 2 wasted trades, right? Very subtly is after we lost that range to the downside, there was a small double bottom. On a 2-minute chart, you can see it better. I don't like 2-minute charts But in this case, because it's so volatile, that 66,000 range could be the double bottom, could fail as well. So just going to keep watching until I see another pattern. Rally, broke to downside. It's not going up, it's going down. Trying to rally, still not going up. Now it looks like, wait a second, this downtrend started to go sideways. This downtrend started to go sideways. So then if I measure that, 2.5%. So now we have an actual consolidation we could play, an actual setup, not a random play. I could target, I don't like playing this breakouts too much, but let's practice example. So let's get that 0.05 units of Bitcoin up on the screen, and I'm risking around $100 to try to target the $200 range. Open up target, so now it's like a 3% stop loss, 6% target. Now I can let it run. If it breaks down, then I'm going to get stopped out. There we go. Measure this again, the 4%. Okay, so we lost this range. We hit the 4% target. We could try that again. Same exact position side, nothing's changing. $100 stop loss. Take profit, $200. And now, okay, we're not really coming down. Made $100 profit on that trade, almost. Right, so sometimes day trading, the trick is just staying alive. Being patient and staying alive with the position size. I even know a guy who shrunk his position size all the way down to like $10 per trade. It's been a while since I've done that. But in these super volatile times, if this was not Bitcoin, if this was like a penny stock, if this was silver during the crash, if this is Ethereum or Bitcoin during the crash, is as a long, if we have nonstop bearish action, I can either skip the trade and do paper trading or bar replay or just turn off the computer. Or I could try trading, but if it's in a nonstop crash, we don't know where the bottom is. So then I have to use much, much smaller position size. So that's what I'm trying to just remind myself and remind people of, is it's not really supposed to be 1% per trade times 10 trades. That's negative 10% of account. It should be 1% for the total, 1% per day total. So if I'm going to do 1% risk per day as a day trader, and I'm planning to do 10 trades or even 20 trades, then it should be 0.05% risk per trade or 0.1% risk per trade. So I have ammo to do 10 trades, and I can make mistakes as a human and then try to still walk away with green profit, even though the profit might be smaller if I trade like that. Personally, that's why I like swing trading and longer term trading, because I don't like having to fight against algorithms and bots, because usually they're programmed to win. So now that we zoom out back into day trading mode, into swing trading investing mode, my style and why you don't hear me pitch a lot of setups and push a lot of setups onto people is I like long-term, very, very high probability position trading. So I liked 2022, 2023, and 2024 setups. Once we started getting to 2025 and 26, especially 26, 25, I was saying I got out of Bitcoin here and got out of Bitcoin here. Try to trade this last part, and then once it failed, I'm out. I'm out of there. Okay, thank you for watching this bar replay paper trading, opinion and education, and it's kind of casual and personal paper trading session, but it's very important to remember that charts are just, it's only 25% of the skill set and ability, if I'm being honest. It's like 20%, maybe even less. For some people, it has to be 50%, but I'm just saying for stocks, charts is not the only thing. For crypto, maybe charts is 50%, but for stocks, it's only like 20% of the skill set to become a successful trader. Because risk management is like 50%. And then 25% could be like fundamental news, in my opinion. Because risk management, not having that correct, somebody could easily go bankrupt in 10 trades or 1 year. Or one trade. Very important. All right, everyone. Thank you for watching. If you like this bar replay, paper trading, consider subscribing, click like, hit the notification bell, leave a nice comment. I might edit this very lightly before republishing. But I want to say thank you if you're watching this, if you supported me and been on the journey. It's been a long time.